All right, welcome to day 9. We're talking about the trend trading rule. And listen, you're going to want to pay close attention here because this one concept, this is what separates the traders who get lucky once in a while from the ones who actually build a career out of this. Let's get into it. You know, this quote says it all. This is the big dividing line in trading. Beginners, they're always trying to be heroes. They want to call the exact top or catch the absolute bottom. They're constantly fighting the current. But professionals, we don't predict. We just participate. We find that river of momentum and we simply ride it. So why do most new traders fail? Well, it almost always boils down to these 3 things, right? Overtrading, having zero patience, and fighting the trend. And let me tell you, that last one, that's the real killer. Trying to short a massive uptrend is like trying to swim against a riptide. You're just going to exhaust yourself and your account, and you'll get swept away. So what's the solution? Is it some crazy complex algorithm or some secret indicator that costs $1,000? No, it's way simpler than that. It's a simple, solid rule. Think of it as your blueprint that tells you exactly what to do no matter what the market is doing. And here is that blueprint. It is this simple. When we're in an uptrend, we buy the dips. We wait for those little pullbacks. In a downtrend, we do the opposite. We sell the rallies. And when the market is just choppy and going sideways, you sit on your hands. Seriously, that sideways action is a meat grinder for amateur accounts. The pros know when the best trade is no trade at all. Okay, so you get the rule, but how do you actually see the trend clearly? Fair question. So I'm going to give you a dead simple 3-step checklist. This is something you should be running through on every single chart before you even think about placing an order. Okay, step 1 is all about structure. An uptrend looks like a staircase going up, a clear pattern of higher highs and higher lows. Step 2 is our confirmation. We use the 50 EMA as our guide. In a healthy uptrend, you want to see the price respecting that line, kind of bouncing off it like a floor. And step 3, this is the secret sauce, right here, is alignment. Does the 4-hour chart agree with the daily chart? Because when multiple time frames are singing the same song, wow, that's a high probability setup. Now, look, having this checklist is one thing, but actually following it day in and day out with discipline, that's a whole other ballgame. That's because the technical rules are only half the battle. The other half is one right between your ears. It's about shifting from emotional, reactive trading to patient, disciplined execution. This is probably the oldest saying in trading, and for good reason. The trend is your friend until it ends. Your job is not to outsmart the market. It's to partner with it. You follow its lead, and you don't leave the party until the music stops playing and that market structure finally breaks. This, right here, this is the professional's mantra. Profit doesn't come from being busy, it comes from being precise. Amateurs think that the more they click, the more money they'll make. But professionals, we know that one single A+ setup is worth way more than 100 mediocre guesses. It's all about quality over quantity every single time. So I'm going to leave you with this question to really think about. Go back and look at your last 20 trades. Be honest with yourself. Were you following the dominant momentum or were you trying to fight it? Answering that question honestly, that could be the most important analysis you do all week. We're going to build on this in our next session, where we'll look at how to actually trade breakouts within the trend. I'll see you for day 10. Trade smart.